Hello everyone, it's Wednesday, November 26. Today we'll analyze the charts for the euro and the British pound to assess potential market movements. As you can see, the US dollar has significantly weakened against both the euro and British currencies. While overall risky assets have gained ground, this bullish trend has not been fueled by positive economic statistics from those regions. Rather, it stems from downbeat US figures, signaling that the Federal Reserve will need to make a policy decision at its December meeting. Yesterday's data revealed that US producer prices met analysts' expectations, increasing by 0.3% in September. However, retail sales were disappointing, coming in at just 0.2% for September compared to consensus estimates of 0.4%, following a gain of 0.6% in August. This decline raises concerns about a slowing US economy. With a weak labor market and reluctance to spend public funds, the prospects for steady economic growth are now at risk. Data also showed that US consumer confidence dropped from 95.5 in October to 88.7 in November, further applying pressure on the dollar and supporting risky assets. On the other hand, the British pound experienced a sharp rise in response to heightened buying activity after Chancellor Rachel Reeves announced a 4.1% increase in the minimum wage for workers aged 21 and above, intended to support low-income earners. This move is expected to spur inflation, increasing the likelihood that the Bank of England will refrain from cutting interest rates at the end of the year. This expectation acts as another driving force behind the pound's rally. Turning to today's macroeconomic calendar, the focus in the first half of the day will be on the ECB's financial stability review and the UK's autumn budget. The latter could lead to increased volatility and the markets, so caution is advised when trading the British pound. Regarding statistics from the euro area, no significant releases are scheduled for today. Please note that October data will be published in November, and November figures will only be available in December, meaning that no GDP data will be reported today. Later in the day, attention will shift to US statistics, with initial jobless claims expected to rise to 226,000 compared to last week. Today's calendar also includes the Chicago Purchase and Managers Index and durable goods orders. What is more, ECB President Christine Lagarde is scheduled to speak today, and the Federal Reserve will release its Beige Book. Now let's move on to technical analysis. Given that the US dollar is in a downtrend, long positions could be viable in corrections, especially in the absence of significant fundamental statistics from the euro area and the UK. This approach would rely on a contributed bullish run in risky assets. Specifically, the 1-hour EUR USD chart indicates that a decline, followed by a false breakout at 1576, would generate a buy signal, potentially driving the euro up to 1.1607. A break in consolidation above this level could push the euro to 1632 and possibly open the way towards 1655. At this level, I would recommend going short on the rebound, targeting a move of 20-25 pips. Short positions at 1607 and 1632 could be considered on a false breakout. Alternatively, if buying activity remains muted at 1576, it would be prudent to postpone long positions until reaching 1.1551 on a false breakout, or 1522 on a rebound, targeting an intraday correction of 25-30 pips. Regarding the British pound, much will depend on the market's reaction to the UK's autumn budget. Since today's calendar does not feature any other significant news releases, it would be prudent to wait for the budget announcement and assess the pound's potential dynamics before entering the market. A false breakout at 31.82 or 31.54 would trigger a buy signal, with the pound potentially rising to 32.11. A break in consolidation above this level would provide strong upside momentum, allowing sterling to surge to 1.3244 and potentially paving the way for further gains toward 1.3277. At this level, it would be wise to consider short positions on the rebound, targeting an intraday correction of 30-35 pips. Short positions at 32.11 and 32.44 would be relevant in the event of a false breakout. In the case of a steep rally, we cannot rule out the possibility that the British pound could reach 33.10, so caution is advised. In an alternative scenario, if buying activity remains subdued around 31.82, long entries could be set at 31.54 and possibly 1.3132 on a false breakout. Much will depend on the outcome of the budget and the market's reaction to it. Long positions on the rebound could be considered at 1.3108, targeting a move of 20-25 pips. Good luck to everyone.